Welcome back to the cryptowrld channel, everyone. My name is Josh, and in this video, I'll be sharing a BITUNIX exchange tutorial, which is one of the top exchanges out there right now for no KYC trading. And that basically means it doesn't matter what country you're from. You could be in the US or some countries in Europe, for example, where some other crypto exchanges might not be accessible, but BITUNIX is accessible. You don't need any KYC, so you don't need any ID to make your account. Simply just an email and password, and you're good to go. And if you actually use the link below this video to make your account, just below this YouTube video in the description or in the pinned comment, that link right there will get you a 10% discount on all trading fees on the BITUNIX exchange forever. But that's only available if you use that link below this video to actually make your BITUNIX account. And if you click that link, it'll take you to this page right here, which is simply the sign up page. And as you can see, once again, a 10% discount on all trading fees if you actually use that link. And you simply just make an account with an email, password, or a mobile phone number and a password, and then sign up and you're ready to go. And also, if you're just making your BITUNIX account using that link, you can get a 5.5k deposit bonus. So basically, if you're just making your account, depositing crypto and making some trades, you can get some sweet bonuses here just by trading crypto on BITUNIX. So if you're going to be trading crypto anyway, you might as well do that. And so with all that being said, how do we actually get started with trading on BITUNIX? Well, first of all, once you make that account using that link, you come up here and then you can go to total assets where you can see an overview of your account. And then you simply just come over here to the deposit tab right here, or you can come up here and click deposit, and then you simply just deposit crypto. You can deposit USDT or Bitcoin or a bunch of other cryptos here. And so in order to deposit, you simply just select the coin and then select the network, also known as the blockchain. So make sure your network is always the same as where you're sending from. So if you're sending from another exchange or another crypto wallet, make sure they link up. Make sure, for example, if you're depositing USDT, if it's on the ERC20 chain or the Ethereum chain, make sure on both ends it's the same. And so once you select the coin and the network, it'll give you a deposit address right here, and you simply just copy that deposit address and then paste it on the other end where you're sending the crypto from. So another exchange or another crypto wallet where you're sending it from. And then depending on the coin or the network, it takes some different amounts of time to actually appear on BITUNIX. So for example, Bitcoin might take a little bit longer to appear compared to something on Ethereum, for example. And so that's how to deposit onto your BITUNIX account using crypto to fund your account. But there is actually a fiat currency deposit method right here where you can deposit using Visa or MasterCard or Apple Pay, for example, or bank transfers using third-party payment providers. But it's important to mention that this option right here, only this option, does require KYC. So if you want to do a bank transfer or deposit using a credit card, for example, you do need a KYC to actually use this option. But if you don't want KYC, you can use the crypto option. You can deposit and withdraw crypto and trade crypto on the exchange without needing any KYC. And when it comes to withdrawing, you simply just click the withdraw button right here, and then you can withdraw crypto. As you can see, you select the crypto that you want to withdraw, select the network you're wanting to withdraw to, and then of course the address you're sending that crypto to. And then you simply just type in the withdrawal amount, how much crypto you want to withdraw from BITUNIX. And if you're no KYC, so if you have no KYC on the exchange, there is a $500,000 USDT 24-hour limit. So you can withdraw up to 500,000 USDT worth of crypto per day with no KYC. But if you KYC, that limit increases. But once again, $500,000 per day withdrawal limit with no KYC. And so once you fund your BITUNIX account, once again, if you go to your asset overview, it will appear right here into your spot account. And basically, if you want to start trading, you head over to spot right here. This is the most simple form of trading, no leverage involved. So you click the spot button and that will take you to this page right here. And this is basically where you can just buy and sell pretty much any crypto in the crypto market. They've got a whole bunch of cryptos on the BITUNIX exchange. And in case you're a complete beginner, the spot market is basically just buying and selling the crypto. So for example, converting your USDT and buying Bitcoin, and then you hold Bitcoin on the exchange in your spot account. And then, of course, once you do that, you can ultimately withdraw that Bitcoin, for example, in that case. But this is just spot trading, very easy to do. And there's limit orders and market orders. And so once you select the crypto that you want to trade with, let's just say Bitcoin to USDT. Let's just say right here, I have some USDT on this account and I want to buy Bitcoin. I can use the limit order to set a price that I actually want to buy at. So for example, if I'm buying, I'll set that limit price below the current price of Bitcoin, so that if Bitcoin goes down towards that limit price that I set in here, then that would buy Bitcoin at that price if the price gets there. And then I simply select the amount of Bitcoin that I actually want to buy and how much USDT that would cost to buy that much Bitcoin. And then I click buy, and that will basically open that as a limit order. So once the price actually gets to that order price right there, that will buy that much Bitcoin at that price. And it's pretty much the exact same for a limit sell order. I select the price that I want to sell at, so I can put in a price above the current price of Bitcoin right here as the order price, and then how much Bitcoin I want to sell, for example, and how much USDT that will get me. And then I simply click the sell button, and that will place that order at that order price. So then if the price of Bitcoin gets to that price, it'll sell that much Bitcoin at that price. And then the market order is very, very simple. It simply just buys at whatever the current market price is. So it's no order price. It's simply just buying right now, whatever the price currently is. And so for example, if I want to buy a little bit of Bitcoin right now, I have this much USDT. I can buy this much Bitcoin, for example, as the maximum amount based on the amount of USDT I have. Then I simply just click buy Bitcoin, and it buys it right now at the current price. And for a market sell order, it's the exact same, just in the opposite direction. It sells whatever amount of Bitcoin I put in here at the current market price. And so that is spot trading. It's very straightforward, no leverage involved, very simple. And once again, it's the exact same thing for all of these different cryptos on the exchange right here. And there's a whole lot of cryptos, a lot of altcoins and meme coins as well on BITUNIX right now. And it is worth mentioning that on most exchanges, limit orders have lower fees and market orders have slightly higher fees. So keep that in mind as well. Personally, I try to use limit orders as much as possible, but if I want to just buy something right now or sell something right now, then I'll use a market order. And with that being said, if we're taking a look at the futures market, which is accessible on the exchange no matter where you're from, once again, it's a no KYC exchange. So if we click this futures button right here, it'll take us to this page right here. But before we can start trading on the futures market, on the derivatives market, we first need to fund our futures account. And all we do here is just go back to that asset overview, which you can find right here. Click the asset overview. And then you simply just click the transfer button, and then you can transfer between your spot account and the USDT margined account, which is the futures account. So you can transfer that way, or if you want to transfer the other way, you can transfer from USDT margined account back to your spot account. And then you simply just select the amount of crypto you want to transfer. So for example, if I want to transfer $1,000 of USDT right here, I can submit that, and that will transfer from my spot account into the futures account. So that's how to fund the futures account to start trading on the futures market, on the derivatives market. And once I have some funds in this futures account, then I can actually start trading on this futures market. Once again, click the futures button to take you to this page right here, and you can select over here a number of different cryptos you can trade with leverage. And now, of course, leverage trading comes with an increased amount of risk, and the more leverage you're using, the more risk involved in that position. And if we go over here, you can select the amount of leverage that you want to use, and that goes all the way up to 125x leverage, which is a massive amount of leverage. I do not recommend 125x. And how this actually works, in case you're new to all of this, let's just say it's 100x leverage for simple maths. If the price moves 1% in the correct direction, so let's just say if you're in a long position, but the price is going to go towards the upside, if the price goes up just 1%, then you make 100% profit, doubling your money. But if the price goes down just 1% with a 100x long position, then you lose that entire trade. Or for example, with a 10x leverage trade, it's the same thing, but 10 times less. So if the price goes up 10%, then you make 100% profit. Or if the price goes down 10%, then you lose the whole trade. And so obviously, the lower the leverage, the lower the risk, but the lower the potential returns. The higher the leverage, the higher the potential returns, but the higher the risk. And so obviously, it's totally up to you what leverage you decide to go with here. But personally, when it comes to my trades, I like to stick to around 10x leverage, give or take. Sometimes 5x leverage, sometimes 15x leverage, but usually around 10x leverage, give or take, is usually what I go with. And if I quickly hide my face cam so you can see what's happening behind me right here, in order to open a long position, for example, first of all, we set the leverage that we want, and then the type of leverage. Personally, I like to stick to isolated leverage, but there is also cross margin as well. And the difference between the two, basically isolated means the most you can lose on that trade is whatever you have in that specific trade, whereas cross margin, you can actually lose what is outside of that trade in the rest of your futures account. And so the benefit of cross margin, it gives you a little bit more flexibility with a lower liquidation price, but there's more increased risk. There's an increased risk because you can lose more if the price goes in the wrong direction. Whereas isolated margin gives you not as much flexibility. It gives you a fixed liquidation price, but the most you can lose is whatever's in that trade. And just like the amount of leverage, it's totally up to you whether you go with isolated margin or cross margin. But personally, I like to stick to isolated margin. That's just what I use personally. And then when it comes to opening a trade, we simply just click this open button right here. And then we can open using a limit order or a market order. Most of the time, we're going to be using those two options right there. Now, there is also trigger orders and trailing stops, but those are a little bit more advanced. Most of the time, you're not going to be using those orders, but a trigger order, for example, basically just has a trigger price, which opens the trade at that trigger price if you're pairing it with a market order. But like I said, most of the time, we're going to be using a limit order or a market order to actually open the trade. And the limit orders and the market orders for the futures trading right here is pretty much the exact same as the limit orders and market orders for spot trading. So limit order, you put in the order price and basically it would open the trade at that price once the price gets there, and then you select the amount you want to put into this trade right here. And so for example, right now I have around 1200 USDT available in my futures account. So if I put all of that into a trade, I can basically have a $12,500 trade because I'm on 10x leverage. But just for the example in this video, I'll set an order price at $95,500 and I'll open this trade with half of this available funds right here. And then I have the option to have a take profit and a stop loss. So if I'm in a long position, I would have a sell take profit or a sell stop loss to basically sell the position, because the long position, I'm basically buying when I'm opening the trade and selling when I'm closing the trade. Whereas a short position, essentially it's the opposite. I'm selling when I'm opening the trade and buying when I'm closing the trade. And so to open this long position, once again, it's just open, set the limit price right here, the amount that I want to open the trade with, and then I simply just open long, click that right there, and then click confirm, and then that places the limit order right here. As you can see, that's a limit order. So right now the trade is not open. It will only open if the price crosses that level. But for now, I'll just cancel that order right here by clicking cancel and confirm. And with a short position, it's the exact same, but in the opposite direction. So I can open using a short. In the case of a short position, I'd have the order price for a limit order above the price. So for example, at, let's just say 96,000. And if I'm placing the order nominal value at around 50%, so 50% of what I have going into this trade right here, and then open a short, click confirm, that opens a 10x short once the price actually crosses above that level. And in case you're completely new to all of this, a short position makes money when the price goes to the downside, and a long position makes money when the price goes to the upside. And now taking a look at the market order, it's extremely simple. It opens at whatever the current market price is. So I simply just place the nominal value right here, the amount that I want in this trade. And then I simply just open a long position. For example, if I think the price is going to go up, then I'll open a long position. Or if I think the price is going to go down, then I'll open a short position. And so for this example, I'll just open a quick long position, click confirm once I check everything's okay. And as you can see, it puts me straight into the trade. It appears right here. And then from here, obviously, you can see the amount of margin that's gone into this trade. So this is the actual USDT that I have in my account, and then the size of the trade. So this is around a $3,000 trade, but I'm only using around $300 to fund this trade because it's on 10x leverage. And then from here, I can place a take profit or stop loss. So if I have a certain price target to the upside, in the case of a long position, I can put that in the take profit right here, and it'll estimate my profit. And then I can click confirm, or a stop loss, I'll put that below the price in the case of a long position, and that's in order to avoid any further losses. If the price crashes, it'll just hit the stop loss and close the trade at that level. And you can also see on this chart right here, there is a liquidation price. So when you're trading on the futures market, there's a liquidation price whenever you're using leverage. And essentially, once the price of Bitcoin gets to that point, so in the case of a long position, the liquidation price is to the downside because you're betting on bullish price action. But if the price crashes, then that will liquidate your trade if the price gets to that liquidation price, which basically means you lose whatever is in this trade. So in this case, I'd lose around $300 approximately based on this trade being an isolated trade. But if I'm using cross margin, I could potentially lose more than this amount. I could lose what's actually in my futures account, but the liquidation price in the cross margin mode would be much lower. And also, depending on the leverage, that can change the liquidation price. So if you have lower leverage, for example, only a 2x leverage long position, then that would have a very, very low liquidation price, so a low risk of getting liquidated. But if you're using very high leverage, then the liquidation price is much closer to the current price of Bitcoin, so a higher risk of getting liquidated on higher leverage. But with that being said, in order to close this long position, I simply come over here to the close tab. And then personally, I like to try and close using limit orders. Basically, anytime I'm opening or closing, I try to use limit orders wherever I can to reduce fees. But if I just need to quickly get in or out of a trade, then I'll use a market order. So there is also this option right here, as you can see right here, flash close. So you just click that and it immediately closes the trade at the current price. But if, for example, there's points on the price chart where I'll take profits from a long position, so for example, around key levels of resistance, personally, I'll use this option right here, clicking close, and then use a limit order. In the case of a long position, the order price would be above the price. And in the case of a short position, the order price would be below the price in order to close a position, and then opening it's the other way around. Because once again, when I'm closing a long position, it's the same as selling, or when I'm closing a short position, it's the same as buying. And so let's just say if I wanted to take profits from this long position, just in this example right here, let's just say if I wanted to take profits at around 98,500 around this previous high, I would click limit order. I'll put in 98.5K, and then the order price, I can have maybe half of the trade close at that price level or the entire trade close at that price level. And so if I want the entire trade to close at that price level right there, I'd go over to 100%, close the entire trade, click close long, click confirm, and as you can see, that places that limit order at that price level. And so in this situation, just in this example, if the price of Bitcoin goes up towards that price level, that would close the long position in profits at that level. But just for this video, I'll cancel that order right here and close this trade in a market order. So I'll simply just come over here, click close, click market order. I'll select 100%, so close the entire trade, click close long, click confirm, and bang, just like that, it closes the entire trade, as we can see right here. And in order to short the price of Bitcoin or any other crypto that you want in this list of cryptos right here, you simply do the exact same thing. You click open, but in this case, you do open short, and that basically trades the move towards the downside. So you're betting on bearish price action with a short position. And then to close, you'll click close short right here. So basically a buy order closes the short position. And also there's a copy trading option at the top right here. As you can see, you click copy trading and it'll take you to this page right here. Personally, I don't really use copy trading that much myself, but there is that option in case you want this as well. And so you can simply just check out other traders on the BITUNIX exchange, see what profits they've made recently, and then you simply just click copy and you copy any of their future trades that they actually make. But obviously there's also risk involved with this. So for example, if you're copying one of these traders and then they decide to make a bad trade, they make a mistake and lose money, of course you'll lose money in that situation as well if you're copying them making a bad trade. But in these cases right here with them making profits, obviously you would make the same profits that they do right here in the percent terms if you're copying them when they're making those profits. And so that's basically the entire tutorial, going from making an account, making a deposit on your account, and then making trades on the spot market, for example, and also the futures market. And once again, if you use the link below this video to make your BITUNIX account, you can get an exclusive 10% discount on all fees on the BITUNIX exchange. But that is only available if you use that link below this video to make your BITUNIX account. And if you enjoy this video, make sure to hit that like button below this video and comment any other videos that you'd want to see here on the channel. But with that being said, check out this video right here, which is my latest analysis update, my latest price analysis. So check that video if you want to know what I'm thinking on the current market, whether I'm going long or short, etc. Check that video out.